Let's shift focus back to the market and get some, global sort of a perspective. A couple of quick things have happened last few days since the last time we spoke with Venugopal Garre, India head of research at Bernstein. So, of course, there is this escalation at the border. India has finally responded with those strikes yesterday. And we also have big news flow in terms of trade with the India-UK FTA, which has been signed. So a lot is going on. Venu, you've written on both these sort of developments in that sense. Just distill your thoughts as in terms of what this all means now for the market from here on. How are you looking at things?
Yeah, thanks, Prashant. I guess a lot of pretty interesting developments which have happened. And I think a lot of more developments are yet to happen. So if you were to just look at the global side of things, from a conflict standpoint, what India did yesterday is perhaps just the starting point of what could be potentially a conflict that we need to see, whether it escalates further, whether there's a further reaction, and whether it becomes a full-blown war, right? So we don't know that yet, but of course I would have a view on it, but at this juncture, that's an unknown for the market. And the second point is a positive part, that we seem to be moving and marching a bit more strongly on the geopolitical front, despite all the challenges that we've seen, especially in this area of trade. UK FTA signing might appear small in the scheme of things, given the small quantum of trade, which is goods plus services of about 60-odd billion, but yet it is just a starting point of the kind of trade treaties that we would be looking to do with other countries. And remember that India is behind on trade treaties per se from an FTA sense. So this is a good starting point. Now, both these events, in my view, are essentially positive markets and non-neutral markets. So that might appear strange, but that is the reality.
Sorry, you're saying they are neutral for market? They are neutral, you're saying?
No, actually positive for markets, both of them. And the first point might appear odd to you, that why would a conflict be positive for markets?
I see. Right?
So
you want to explain? You want to explain that, the first point then?
Yeah, so I mean, look, we look at this history, and I'm pretty sure you would have seen a lot of literature and a lot of articles on this in the last couple of days. See, fundamentally, the point of view is this, that historically, whenever we have seen conflicts of this nature, even into 1999, when we had sort of a Kargil war, the market reaction has been pretty soft, in the sense that the declines have been pretty modest, usually in day one, day two, and thereafter the rebound has been fairly swift. And in 2 weeks or 3 weeks or a month, we've actually ended up being higher than where we were in the previous phase or before the conflict starts. So if you were to just think about it broadly, economic sense viewpoint, and the second thing is government finances. Now, economically, we are of the view that where we are fundamentally at this juncture in terms of a cycle, a conflict to the extent that we are seeing today is not going to be impacting the path from a point of view of where the economy is heading. So that is one very critical point of view. We are not at the peak of a cycle. We are somewhere in the mid of a cycle with a very supportive base. So that's one important part, which is very critical. And more importantly, I think geopolitically, since we are strengthening our relationships, with a lot of these direct engagements with larger countries like US and UK, this sort of also limits, in my view, the extent of which this conflict can escalate. Right. So these two things makes me believe that we are not going to see any major correction in the market. And if at all a correction happens, investors should be buying that.
Venu, but it is not positive then, right? I mean, you said that it's positive for market. That largely you're pointing to earlier conflicts and what markets have done. So in that sense, you're kind of just pointing to price correlation, what prices have done post. But it's not fundamentally, it's not positive. Or are you saying that?
Oh, so this is more a reference point of view of market reaction to these events.
Correct. I thought so.
Yeah. So it's more a reference to market reaction, which tends to move up in a couple of weeks or 2 weeks post the event, right? So that's the history. Obviously, nobody wants a war or a conflict. So it's not positive from a point of view of the non-economic factors, right? That, of course, goes without saying.
Absolutely. So Venu, tell us a little bit about the earnings picture so far, fourth quarter, it's a pretty subdued picture. Expectations were subdued. Have you done any work so far? About 200, 250 companies have reported. Where are we at?
Yeah, so, if I were to just look at the earnings picture, I think we discussed this last time as well. There has been a pretty wide range in terms of performance within sectors, right? So even within financial sectors, you would have seen good numbers versus average numbers versus bad numbers. And I would probably say that, remember, this is fourth quarter, and to a large extent, what we're essentially seeing in Q4 is more, I would say, the impact of what we saw from a point of view of economic weakness that happened through the year. Now, if your first half itself had literally no growth in earnings, and earnings estimate cuts had just about started after Q3, you typically tend to see a lagged impact where whatever consensus is expecting is firstly not right to start with. The more important part is that is something which the market already realized, that there would be a difference between what consensus expects versus reality because of a forecasting error than anything else. So what I'm essentially trying to hint at is I would not read too much into the 1.5% of earnings cut that you've seen probably at a headline index level. It has nothing to do with how things would move forward in the next couple of quarters where things might start to look up. So that's the perspective I'm trying to bring in. So I won't read too much into some cuts that we've seen in Q4.
Do you have you and your team, Venu, have a view on pharma as a space with regards to everything we've seen? That executive order onshoring, at least the attempt at it. There is communication from FDA as well.
Okay, look, we don't cover pharma bottom up, so I can't give perspective on that. At a top-down level, I'm in a very strange situation right now from an articulation of a view, because I started the year with downgrading healthcare or pharma to an underweight from being overweight last year. And after the sharp correction that you saw in the first 2.5, 3 months of the year for that sector, which was perhaps the worst performing, amongst the worst performing ones, I neutralized the sector to an equal weightage sort of a stance. So equal weight doesn't really mean much. It essentially says that I'm not a big seller post this correction.
Okay, got it. Quick conversation today, Venu. Thank you very much for joining us. Appreciate your time here on CNBC TV 18. Well, I think